All right, welcome back to Technical Thursdays, where we take a look and do something just chart related. On Wednesday, we're a little nerdy with quant stuff. On Thursdays, we do just pure technical analysis. I try to highlight something I'm seeing in the market that I can then do an educational point on as well. And this is my favorite topic, so I may do it a couple times, but this is polarity. So, this is the idea that prior support comes resistance, and I think we're seeing something here on the SPY that'll be very interesting to see going forward if this ends up holding. So, without further ado, I just had something pop up my face here. There, we'll get that out of the way. And we'll just pop into it here, right here. So, the idea is pretty simple when it comes to the SPY, not the SPY. But when it comes to these ideas in general, is that what we're looking for is we're looking for an area that the market respected on the way up for them to also respect it on the way down. We don't have to get too fancy with it, but I do think it's important to go over why this works and why I think that this is a really good strategy for anyone to take a look at and potentially implement into their own trading. You can see, right? We had this area here in the SPY, and then we had this area here. Now we're selling off a little bit, but look at right where yesterday's low came, right to that zone, before bouncing higher. Now, we'll zoom in to get a little bit more of an effect here, but the idea is that this is something that works, you see commonly, regardless of time frame, regardless of security type. You can Forex, crypto, whatever, you can trade off of this idea because it makes sense psychologically, and that's what we want to do when it comes to technical analysis, and when it comes to even fundamental analysis, or even uh, quantitative analysis, which I do. Is we don't want to fall into the trap of this pattern exists, and some guy on YouTube, me included, told me that this pattern makes sense, therefore I'm going to start trading it. We want to understand the why so that we can start to build more rules around it in a way that makes sense. So the why, prior support often turns to resistance and vice versa, is simple FOMO and fear, right? So for example, let's take two hypothetical people, one who is a long trader and then one is a short trader. And we'll see why they would be very interested in this level. Because the first time the market comes up and rejects this zone and pushes lower and then comes back to that zone again, you have everybody in the world watching that zone, watching this price level, this blue line that I drew in. You don't have to be a fancy technician to know that this was the all-time high in the S&P 500. If you have to get really nitpicky with these levels, as a side note I'll give right away, they probably don't work. But this was the all-time high in the S&P 500. We fell pretty dramatically from that all-time high, so that when we come back up to it, tons and tons of people are interested in that. What creates support and resistance are people who are shorting, saying, I think we're going to respect this all time high and move lower. Then you have people who potentially were long as prices rise and saw that the last time we were there, we sold off. So it's probably a good place to take some profit. That selling creates this next little push that happens lower. So when we get back there, you better believe there's two people who are interested in the market right now. One is your short seller trying to get back in and say, I made a little bit of money short the first time at this level. Now we're back there. Maybe I'll short it again. Or maybe I didn't make any money, but I see we're back at that zone. I'm going to try to defend it with selling, which, right, we know it doesn't work. And then you also have people who are looking to have some that are like, I'm going to buy this thing if we break out to new highs. Then we have a gap up the next day. Right? So we gap over that level and we run through it dramatically. That's another part of this pattern that I think is very, very important. So now we have two things. We have shorts that are dramatically underwater because maybe they shorted on this day right here when it looked like a rejection from that zone. And now they're back up in that zone and they have to say, oh no, right? I am short right here and I made this error and now I'm down a bunch of money. So let me just see if I can try to get out break even. So as the market comes back into that level, you have two people. You have the guy who missed the buy because of the gap up, or the fast move. Doesn't need to be a gap up, it could just be a pretty dramatic move. And then you also have the guy who is short and is losing money because of that move as well. So you have these two things occurring where now you're going to have people buying here. You're going to have the guy who's short covering to get out of his position break even. You're going to have the guy who missed the move initially buying because it's right back where he wanted it before. He liked it at that level before and now it's come back to it. That's great. And you have a couple day push up after that. And now we come back to that level and then we looks like we have bounced again. That's the psychology behind it. The reason that I think this is such a good trade is because everything is very simple from this point on. Right? You're always going to be trading with the trend. If you're looking to buy a prior support zone on a pullback, then you're buying a pullback and it has to be trending because it broke that resistance zone to come back to act as support. So you're trend trading, which is great, and you're buying a pullback, which I also think is great. And it's an area that the market cares about as opposed to just nitpicking some indicator or some area. I think that's also great. So, on top of all of those things, now you end up having a good risk reward play because if the market sells off and closes below this low, then this zone's probably invalidated and it time to move on. That was a good trade. Maybe if it gets back above there, you try again. But oh well, you took the shot and you lost. But if we end up bouncing and pushing much higher, then the risk reward is pretty clear. So for if I put a stop limit under, let's just zoom in to make this really clear. So now we have this hammer that's occurred at this big level. So the trade for me on something like the SPY here would be very simple. I want to see us break. Now we have two areas there as well. These zones, if we break that, then I'm interested. If we close below that low, it's time to go. And do I think I could make 2 times my risk up here? I absolutely. I think that's a good idea. So if I'm right 50% of the time, I make 2 times my risk. That's all I want to do. So that's why I like this idea of prior support becoming resistance. Happens the same thing on the way down. Happens regardless of time frame. You have this confluence of psychology at this one zone, and you get to play off that, knowing that there should be a pretty quick move off that level, and if not, it's not really much of a risk, right? And that's what we're trying to do. We're trying to risk very small, win very big. If we're right half the time, we'll end up making money in the long run. So that is it for Technical Tuesday. As always, make sure you go over to statsedgetrading.com. Try StatsEdge Pro, right? We've been doing very good with strategies that look exactly like this one that are fully systematic and automated. I email you a members only video and all of the output to those particular strategies and exactly how they would be traded based off the algorithm each and every week, and then hang out in our Discord room where we chat day to day because we're always taking strategies like this. We're adding human discretion to them to give that little bit more edge on top of what a system would do on its own. Thank you guys for tuning in. I'll talk to you tomorrow.